Welcome back to Main Station. So, well, as you can see, in this video I'll be talking about S&P and Dow Jones and how I most likely was wrong in the midterm, or also in long term, or more in the midterm actually, since, well, anyway, so we look bullish. We do look bullish. I mentioned this also in my latest video on the S&P and the Dow Jones. So I wasn't wrong in that aspect, but I mostly was wrong in that this would be a dump, and after that we would see continuation to the downside and most likely hit my next target of 213. Well, this hasn't happened yet, at least, so well, bear with me. But as I mentioned also, well, we had seen very nice consolidation under the 200 moving average on the 4 hour. And as you can see, it has been nice resistance in the past. So, and it still is, or it has been, and now we have broken above it with some nice trading volume. We had an equilibrium forming right here. If you go to the hourly, you can see it a bit better, and quite choppy in this area. As you can see, we had some islands right here, but since these islands didn't see more downside, it was most likely that we would actually consolidate further and see more upside, at least in the short term. So, well, we have now done that. As you can see, we broke it right here with this big trading candle, and also broke above these highs. You can see it basically was a double top and some sort of ascending triangle you could draw right here, and not really an equilibrium, but still still a bullish pattern. And as you can see, we broke it. We had this rising wedge, and I also mentioned, or I drew some targets we would most likely reach after we break this rising wedge. And since I also mentioned that this rising wedge is quite parabolic, so ascending quite quickly, that if it breaks, we most likely won't see too much downside, and actually see it consolidate, or if it drops, this big drop would be the beginning of a consolidation, and after that we would see, or we could see more upside. It would depend on the situation at that point. But as you see, I drew 4 points. These were arrows back then. I made them like some small lines, so I wouldn't have all of my charts clustered with some lines and arrows. So, well, my first target was just below and basically the bottom of this rectangle, which I drew back in the day. I think somewhere around here I drew it, and I don't know yet, or I don't know, but that doesn't really matter. Well, we hit it basically like maybe a few 50 cents above it. I drew it around 260, so we basically reached my first target in this consolidation, and didn't go any further since this was a low. So after making a low right here and this small consolidation right here, I figured that this would be most likely our bottom for this pattern. So it was, and it was the most bullish case, and the most bullish case played out. So this is quite bullish in my opinion. And yeah, so I can now delete most of these. I will keep my rising wedge for now, but I will delete it also in the future. And yeah, well, quite nice follow through. We are now seeing a bit of rebound right on the top, and if we go to the daily, then we can draw a Fibonacci from the top. And since I also mentioned that we reached above the above 33% and above 50% of this downfall, this is bullish, and we are now hitting exactly on the 6.8 retracement mark. or the 3.8 382 point. It doesn't really matter. It's just basically either 33% or 66% of this retracement. So yeah, on the daily, as you can see, our 200-day moving average has been quite nice, or it has reached above, or the price has reached above it 3 times in this consolidation right here. So don't get too excited if we reach over it for now. We could now form a shooting star on the top, a reversal candle, and if this sells a bit more, maybe even gets red, then we could see we can see further consolidation in this area, and this wouldn't be too surprising in my opinion, since we are now hitting quite heavy resistance. If this breaks and if we see just short-term consolidation, then it should be shorter than this right here, since consolidation patterns usually get shorter the further a bull move plays out, until we see a rebound and a trend change. But if this breaks, then my next target would be either 2 or we could see short-term resistance around 274, but most likely we will reach back up to these highs right here around 280, and then I would look maybe for a weekly inverse head and shoulders pattern. And if you now go to the weekly, then you can see what I would mean. This would be our left shoulder, our head, and then our right shoulder. So what I think will be most likely in a weekly now is that if we reach above the 6.8, then we would consolidate in this area, see some choppy action, and maybe even reach back down to the 0.5. Maybe get our second or our right shoulder for this inverse head and shoulders pattern, and then see further upside after we reach back up to this 7.8, and this would be our neckline. So it's all coinciding quite nicely in my opinion. And well, you can see on the weekly we haven't consolidated actually. We formed a hanging man right here, but it hasn't played out since we've seen further upside. So our moving averages on a weekly are now also slowly creeping back up. You can see the 50 week is flattening out, and we now see basically the 50 and the 12th basically lining up. The 50 and the 26 moving average lining up, and our 50 is slowly coming back, or is a bit slower of course than our 26. So we could see, or we could look for a bull cross in the near future of the 50 and the 20 and the 26. So quite interesting. And that doesn't have to mean much, since we had the death cross right here, and as you can see, nothing really happened. So just keep it in mind and respect it in your analysis. But if this 6.8 mark still acts as resistance for maybe the next week or two, then we would consolidate most likely in the 0.5, or just between the 0.5 and the 0.618 mark, and most likely see continuation to the upside after that, and reach up to the 6.18, break it, and then go up to the 7.86, and maybe form our right shoulder for this inverse head and shoulders pattern. Of course, this doesn't have to happen. This pattern just could be one of many, but it looks quite nicely in my opinion, and I could see this be playing out over February. Yeah, so this is quite bullish in my opinion, but we are looking for consolidation quite soon on a weekly. We are actually we first of this this week had more volume than our previous week, and this is the first time this happened in this bull move. So this is interesting. You can see it's just a little bit more volume, and our trading day, or this is the last trading day of this week, so nothing too special, but it's still interesting. And yeah, and you can see we had declining volume after basically our bottom. So we are looking for some sort of consolidation and maybe create two red candles or just a few red candles, and then see it break with increasing volume, since this would be the bullish case, and a nice bullish case, and you want not just a bull move, but you want it also acting like a bull move. So yeah, well, this is the S&P. I think I talked about what I wanted to talk about. Well, yeah, the week moving average, the 200 week moving average has been acting as nice support, and basically, yeah, what I also wanted to say is this bear flag on the bottom, we now confirmed it breaking and retesting our channel line right here. And well, since we only had two tops, or basically just two touches of this trend line right here, or of this channel line, and this is the trend line, my bad. So of the channel line, we only had two touches. So well, it looked like 2008 and 2009, but since we reached up to our lows and broke this trend line right here, it doesn't look like the bearish case which we had in 2008 and 2009. So well, I think these similarities between 2008 and 9 won't be playing out on the S&P. And if you just look at the Dow Jones, then you can see very similar movement, very similar pattern, basically the same. Also very bullish. I don't know the Fibonacci. Yeah, actually it reached above the 6.8 today. So this is nice. This is even more bullish than the S&P. Maybe even now forming some sort of small shooting star, but still very bullish. And this divergence, which we've seen on the 4-hour, well, it doesn't play out on daily. So you want to take it with a grain of salt. And yeah, also we could see an inverse head and shoulders on the weekly on the Dow Jones, of course. Well, but our neckline isn't as nice as it is on the S&P, since this high was higher, or this point was lower than this high, so it doesn't line up too nicely. But anyway, very similar movement, very similar patterns, Brent price action. So well, yeah, we do look quite bullish. And of course, if you want to enter trade, well, I would now wait and be a bit patient, since we are quite extended. Not much on the weekly, but on the daily we are close to reaching up to 70 on the RSI. So you want to be a bit cautious.